All right, good morning. Live stream is all set up. So the daily chart kind of has an interesting pattern that's doing here. So one thing I noticed is that we've been sideways this week. Now we've had big days. Like Monday was a decent sized bull bar, um, but Tuesday was an even larger bear bar, so it reversed. Then Wednesday reversed again. Thursday gapped way up, but then it reversed down and tested the close. So this week could be looked at as a double top from what we have so far. So market went up, pulled back, went up a second time, and essentially just tested this high and then pulled back. So now this would be a considered a short below this bear bar. So I think the market would be interested in testing yesterday's low to see if there are sellers there. And if there are, probably a lot of these bulls that bought here and here would be getting out below that bear bar. We have a lot of distance to the moving average, and so we're way above the moving average. So we're seeing we are above the average price, but we're not seeing exceptional bullishness to justify buying up here. So I think if we get to yesterday's low, which we could, we almost certainly will now that we're so close. Let me just draw that in. So huge bear bar on the first bar, small tail on top, almost essentially no tail on the bottom. So basically close on its low. So a very strong bear bar. With the open though, when you get strong bars on the open, so often they reverse. Half of all strong moves on the open reverse. Doesn't matter how strong they are. So even if we got a second and a third bar that were large, um, there's still be about a 50% chance that move would actually end up reversing. Yeah, so that's about a 15-point bar. There'll probably be some sellers at its midpoint looking to sell more higher if it continues higher. Hey, good morning, George. I have the chat on a different screen. So to me, almost certainly we're going to go below yesterday's low here. I think any pullback here is going to be sold. So like sellers at the 50% pullback, and they'll just continue to sell higher. I'll pull up the daily chart again. Daily chart showing this double top here. Market raced up. We got way above the moving average. Strong bear bar. This is bad follow through. Got an entry for the longs, and then they got bad follow through again. So now it's essentially a double top. This is a sell bar. So the market is going to at least go down below that bar to see how many sellers. So to me, almost certainly that's going to go there today, especially after this huge first bar. You know, we're going to get at least a little bit of follow through, kind of like this. You know, 2 bear bars down. The pullback, there were sellers into this pullback, and then you got a second leg. George, is this your first time in the stream, or have you been in before? So I'm going to just check out a couple other charts here. So this is the crude oil chart. Cool. Been in the stream before. George Mitchell. Oh, you're John Doe and George Mitchell. Crude oil, big gap down. Let's look at the daily chart on crude. So to me, it looks like crude's gonna have more down, which is good for us at the gas station. We're below the moving average, getting some bear bars. This bar is still early in the day, but so far it's a pretty strong bear bar. Gold chart, gold gapped way up. Gold's having a lot of bullishness. We'll monitor that. Might be able to get in on a trade on gold later. So the market has had these opens lately where strong moves are being, like, we have large bars that are getting bad follow through. Today, big bear bar, immediately followed by strong bull bar, and then a second bull bar. Yesterday, sell off. Every sell off had bull bars, and every rally was sold ultimately. Then the day before that is the same thing. Couple bars down, reversed up. After the second leg, bad follow through. And then for this leg down here, it also got bad follow through. So to me, I would expect trading range. So look at the daily chart. We're so far above the moving average here. We're 100 points above the moving average. So we are exceptionally far from the moving average. But are we seeing exceptionally strong bullishness to justify buying up here? Look at this bad follow through in these big bear bars we've been getting, and we're having this double top. So to me, there's not justification for buying way up here, and it makes me think that we are going to go below this yesterday low. We're so close to it now. There's probably a lot of sellers there, so the market will probably find its way down to that today. So there are probably sellers at this midpoint, probably sellers above the first bar of the day. And what they're doing is they're just trading very small. So if I was to take these trades, I'd probably just be doing, a couple micros, 5 micros, sell here, somewhere above. And your stop is just, somewhere way up here. But I think the issue with trying to do scalping like that is that it'll probably work, but it's so much it's so much more management that's required. It's really it's a bit of a distraction from the good trades. So if you're worried, if you're too busy like scalping with micros, then you're kind of losing focus on what the like really good trades are, and you might miss like some of the premium setups if you're too worried about doing scalps. This is the euro dollar future, gapped up way above the moving average, 200 moving average even. And the soybean chart, this is the soybean future. And I found that the soybean moves similarly to the E-mini, which is good for us because we watch the E-mini so closely. We understand the personality of the E-mini, and to me, soybean trades has a very similar personality. Like the types of setups are the same. Like to me, this would look like a E-mini chart to me, or yesterday this. Just the way it plays against the moving average, the way its double tops and double bottoms work, which is different from something like crude and gold. Crude and gold have different. They're just different. They're different styles. Gold continuing to rally up. So now at this point, we've had 2 strong bull bars. They've not yet come above this high, but at this point, we have enough buying that the bulls also have a case for being able to scalp and buy more lower. So buy and below this bar and below low of the day. And that's really how trading ranges start, is that both sides have a case for a good trade. And when both sides have a good trade, well, each side is taking that trade and then they're scaling in. So if one side will win initially, then the other side will just scale in and continue to add on to their position, which causes the market to pull back. Then you end up in a trading range. So market is pulling back to this 30% pullback, and was kind of testing it there. That little bounce probably was from some sellers that had sold here and sold a few points higher and were trying to get out with a profit on their first sell. So another reversal bar, another big bar that has reversed. So this is what I was like I was saying, this open is like the other opens, where every strong move just gets reversed. So we really want to be, staying out of trades here for a bit until we do something different from this. You could argue double top, bear bar, sell below. And I think you'd probably be right. You'd have to trade small though, and go for a swing. And probably stop above the high of the day. I really am quite confident that we'll go below this low here. I don't think the bulls will be able to continue to buy all day and keep it above that low. It's just such an obvious sell signal. It's just such an obvious place for bulls to be getting out. If they were long through here and buying above this bar, they're going to be getting out below that bear bar. So there's just a lot of orders there. Far from the moving average, it's just a very obvious place for the market to get down to. I wonder if I play music if YouTube is going to do a copyright strike if I just play some music in the background on the stream. So gold has had a fourth bar up. So look at the difference between the gold chart here and our E-mini chart. They both gapped up, but the gold chart is way above the moving average, but it is also getting strong bullishness. So there is some justification in buying up here, buying closes, buying above bars. So you can see how the difference in these charts. Now this doesn't change the fact that most 50% of strong moves on the open are reversed. So just because we're getting this now doesn't mean this isn't going to reverse. And also remember that every day touches the moving average. All right, so another bull bar closed above the previous high. So 5 consecutive bars, definitely some good buying there, but it's still in that category where it'd be 50% of moves reverse on the open, and every day touches the moving average. You can see we gapped up here, stayed above it for a while, but eventually the market pulls back to the moving average, or the market goes sideways, so the moving average catches up to it. Yes, I would advise against taking trades in this area. Even if you're trading small and doing scalping, I feel like you can still do that, but I just know that this is the difficult area to trade in. When every time it looks like it's gonna be breaking out, and then you get bad follow through. Continue to do that. Hey, good morning, Sniper. So I think for us, launching this gold chart might be a little bit more interesting because gold should have an opportunity for a swing today. So after 5 bull bars up, either it will, after it pulls back some, it will have entries to go long, or this will end up failing, because like I said, half of all moves on the open were reverse, so this will end up failing, and then might be able to get a swing short. However, that's lower probability. I would rather only be thinking about taking longs. I just know that once so most of the time, the idea you want to be thinking here is getting long later in the day after the market has kind of cooled off some. It'll pick up steam again. I think you can start looking for longs like at the moving average. So let's see if I can find an example. I mean, this isn't exactly it, but it's near the open, and you've had a few bars up. And then look, these pullbacks, double bottom here, buy above. You could have held all through this. Same thing here, bull bar, could have bought, did the swing trade up. So that's kind of the idea. This is more what you want to be, how you want to be trading it. If you start to get the strength like we have on this, probably like, that's just where your mind wants to be. But there's a part of the time the market will, let me see if I just draw in. So most of the time you want to be looking for swing trades long throughout the day, but then sometimes this move will just end up reversing. It might kind of get some sort of double top, and then over here it'd be touching the moving average now. Maybe rather do a trading range for a while, or we break below the moving average and try to test the moving average a couple times. Fail to continue higher, and then you get some sort of sell-off. This is more like the 20% of the time. Well, more like 80% of the time we either have a trading range or a bull trend, but we still have to get outside of the open, because like I said, half of all moves on the open reverse, doesn't matter how strong. So might end up getting a sort of double top here and then pull back. So now the question is, probably bulls would probably sit through this first pullback here, but then if we get a second bear bar, I think they'd be getting out below that. Yeah, sniper, I definitely agree. Playing off of the moving average, that's more of a safer bet. But there's definitely people that have been buying through here, and betting that the market that the pullback is going to stay below this low, and that we'll just be able to continue to trend up. Yeah, I think they'll sit through this first pullback, but if they get a second bear bar, they'll probably go ahead and just get out and wait. It's back to the mini chart. More trading range price action. This is so I'd definitely be staying out of any stop order trades. We're in the middle of a trading range, and we're actually right in the middle of we're in the middle third of the trading range. Now we're starting to get these small bars. For anyone that might have joined the stream in the last few minutes, I started the stream talking about this, the daily chart, and how we're looking at a double top on the daily chart. That's kind of a distracting line. Double top. This would be like a first entry short and a second entry short. And the bulls have been so strong through here. They're so far above the moving average that I think they would take profits below this bear bar. So they'd go ahead and get out below this bear bar. And then bears, they have a reasonable idea too, double top. And probably be some bears interested in selling below that. So to me, that's going to be a target until it gets hit. And if it gets hit, we could have a decent move down. So at this point right here at like 9:35, I was almost certain we were going to go below this. And We've had some bars up now. I'm still pretty confident that we're going to go below this today. There's just too many orders that are right there. And the bulls are way above the moving average. What's the odds that we'll be able to hold above that level for the whole day today? If they are able to, then I think that would be a bullish sign going into next week. So I can pull up the weekly chart, but I want you to kind of imagine the weekly chart looking off of these 5 bars here. Week opened here. We went down, which creates a tail on the bottom of the week. Now we're up here. So we would have if the week closed right now, we would have a small bull body with a tail on top and a tail on bottom, but it would still be a bull body. Now, on Friday, that's the reason the open of the week is an important price. Is because if they can be below the open of the week, then the week turns into a bear bar. So to me, most likely, the market will go below yesterday's low and test down lower, which means that if they can't do that and they do the less likely thing and stay up, then that would be bullish going into next week. So looking at this bull bar here, I know I just said avoid trading, and I think that's still the best thing to do. However, I don't think it's unreasonable to be trying to swing trade above that bar. So we had a test of the open here. Now, market has had a first entry short, and then a second entry short here, and then a good bull bar. Now, the context is not the best because we are in the middle of this trading range. So what does that tell you? That if you take this trade, what kind of profit do you have to go for? You have to make sure it's a swing trade. So if you're buying above that, you're betting that the bears are going to fail here to go lower, and that the bulls will be able to rally up. So you need to be going for at least 2 times your risk, which would put you up here. So I don't think that's an unreasonable trade, but you have to do a swing trade. Gold chart. So bulls, not many bulls got out below that bear bar. A lot of them stayed in, and now we're getting a second chance up. But if we get a second bear bar, then I would expect that the bulls would be getting out below a second bear bar. Like if this, let's say this closes like this, and then the next bar is something like this. I think a lot of bulls would get out below that, and then we'd have at least a small move down. Because they're way above the moving average. We're still in the open, so probably there's a near 50% chance this just reverses down. What's the chance this just trends up like this all day? Like it will touch the moving average, but what's the chance it just has kind of somewhat small pullbacks and just keeps moving up? Maybe like 20% of the time, this will just continue to trend up the whole day. So so what some people might do is they might buy above the next bull bar, and they'll put their profit somewhere way up here, and they'll put their stop below this bar, And then basically, I think any bear bar, they would just get out below it, but then they would get back in above a bull bar. And they would continue to do that as long as it's reasonable, as long as it's still in a bull trend. So above this bull bar, it looks like there were some buyers above that. We'll have to see if they'd actually be able to get a swing trade up. I think it'd be better to try to be like selling above this high open of the day. I mean, I'm not really going to take anything in here until there's a breakout. I know I'm throwing a lot of different charts at you guys. This is the soybean chart. And the reason I'm showing this is because I've been looking for charts that trade similar to the E-mini. And I found that the soybean chart actually trades very similar to it. It reacts to the moving average in the same way, and its entries, it's for trades are very similar. So going forward, I'll definitely be watching the soybean market closer. Like here, I could see a potential long entry. 2 legs down, both failing at both moving averages here. So 2 legs down, possible swing buy above this bar. Couple legs down, moving average. I think it's even better that we're above the 200 moving average now. So we've been below the 200 all through here. Came back, double topped at the moving average there. Now we finally got above it, and possible swing buy above that. I think, like I've been saying, I mean, there are trades in here. Like, I think you'd probably take a swing buy there. You'd probably be buying below this low or selling above this high, selling more higher. I think all those are things you can do. But really, for anyone, like for anyone that's that's starting out, that has a small account, like when you start to see this, just step aside, just ignore it. When you start to see big bars that get bad follow through, and when you get lots of reversals, then that means that the market is unsure. You're at risk of just getting whipped around. And it's best to just stay out. And sometimes actually in trading, a lot of times the best thing to do is nothing. Coming back to gold, so there's a chance we'll have this second entry, this second short that I was talking about. Yeah, so the bulls, big gap up, 5 consecutive bars closing near their highs. most of them will ride out one pullback, which is this. But if they get a second move against them, then they'd probably get out. They made some money through here, and then far from the moving average. And if there's a second attempt against them, they'll probably just take their money and wait for the next entry. Yeah, if you guys fucking flip between charts too much, let me know. We can. I'm kind of just flipping back and forth because, I don't think the E-mini's in a great spot to be trading right now, and I'm kind of interested in analyzing these other charts. Soybean. So continuing to get bars that reverse, large bars that are reversing. And so I think most traders just should do nothing right now. But it's not an unreasonable swing trade here. Possible double top with this and this. We're staying below this opening bar. Possible double top. Not unreasonable to take a swing short below that. And it's better that we do have the target below that we've been talking about, which is yesterday's low. So this red line here, yesterday's low. So limit order scalpers have been making money through here. If they just reversed every bar, then let's just say they reversed every bar and went for 5 points. They would have made 5 points on this first bar. They would have sold this bull bar, but they could have sold more higher and then made it back here. Could have bought this bear bar, made it here, sold through here and made it back here. So they already would have made 20 points. And that's great that they were able to do that. The risk though is that we break out, and then as they're scaling in against this breakout, and those 20 points can go away pretty quickly, especially when individual bars are almost 20 points themselves. You have one bar that breaks out against you as you're scaling in, and suddenly, right, maybe you made 20 points, but then in one trade you can end up being way worse, way down more than 20 points. crude and gold are kind of doing the inverse. Crude gapped way down, and it's getting good follow through. Gold gapped up, and it's getting good follow through. So as strong as gold is looking today, it will touch the moving average. And I don't say that to. I want your mindset to still be looking for longs, like figuring out ways to get into this. I don't want you to have the mindset of you have to, like, if there's a strong move, you have to like try to figure out how to reverse it. You shouldn't. If there's a strong move, you should look at how to get in with the move. But every day does touch the moving average, so it's just kind of that's just kind of a fact to be aware of. You know, the open the open of the day has a lot of opportunity. It also has a lot of risk, and I think it just has to come down to what your personality is, on what you feel comfortable doing, and like where your edge is. Because the open, like I said, 50% of the moves on the open reverse, and you can really get mixed up on the open, and you can really end up in some bad trades that set you back for the whole day. You know, you don't want to start your day off with a bad loss. It it just it puts you in a bad mood for the whole day. Um, it makes you emotional. You feel like you have to like win it back. And the open can be so choppy, and you don't know what kind of day the market's going to be yet. So you're trading a market where you really don't know what it's doing yet, and it's trying to find out too. You know, the that's what the big funds are doing on the open. They're testing different directions, and it's not really laid out yet what kind of day it's going to be. So there's opportunity on the open, like I've talked about in recent videos, where let me add more days to this. Which was it? Yeah. So like here, this is 9:30, double bottom, and there were buyers above this bar, and uh, sometimes you can catch the low of the day, and the market has trended up all day. And I took this trade on the micros because I had to step away, so I bought. Then it came back around noon, and the market was way up here, so that worked out. And that's a strategy that you can implement sometimes, is trying to find the low of the day, because the low of the day comes early. Like if you're in a bull market, like if you see this kind of buying or this kind of buying, then look at the tails on the bottom of these bars. Tail, tail, these little tails. Those little tails are coming from the first few bars of the day. So if the market's going up, you get a small move down on the open, then I think it's reasonable to try to look for swing trades. But you got to hold them, for you don't want to just scalp out. You want to hold them for most of the day. So that being said, kind of comes down to your personality. Most of the time, I would rather hold off on the open and wait to see what the day is like. And then once I understand what the day is, then I can take much better trades. But maybe you do have the personality of, like I said, like maybe that strategy really clicks with you, where you want to try to find the low of the day. And you're willing to be wrong several times in a row before you're right. And then when you are right, you're able to hold it for the whole day. So it just comes down to where you're comfortable and where you can find your own edge. Gold has been very strong. Now, these bars aren't large, but they're consistent, and the pullbacks are small. So this is actually a very tight channel here. Soybean, I'm gonna watch this soybean chart. I'll keep an eye. A possible trade idea would be that we have this low, and now the market's broken out below it, and the moving average. Now we're testing it back. So if I could get a second entry short here, I'd be interested in taking that. But it'll still take a couple of hours to set up. I think there'd be more sellers now below this bar. So I think more bulls would get out if this is a bar closing near its low than they did here. So the gold futures, it's $10 a tick, and a tick is 10 cents. So and go way down here. It's like this 0.1, that's worth $10. And so then a point from like 25 to 26, that's $100. So I would imagine there's some profit takers below that bar. I think to short, I'd still want to see a double top over here. So I'd still want to see another bear bar, like another 10 for the bulls up and another bear bar. So I think this is a decent setup for a long here, but the context is bad. Right in the middle of the trading range. No one that has been taking swing trades has been having good follow through today. This was okay here, but they still didn't get their profit target, which is somewhere more up here. Lots of overlapping bars. Yeah, not a good place to be trying to trade. When you get days like this, opens like this, I call them large bar trading ranges. And really, they're different from a normal trading range. I think this is like a really dangerous place to try to be trading. Because with the trading range, your profit potential is small, but then you have large bars, so your risk is large. So you just end up getting, you don't have many variables working in your favor. So what some traders will do is they'll just continue to buy above bull bars because there's a chance that this will just, that the pullbacks through this whole day will just be small and it'll just continue up. It'll have a pullback to the moving average, but um, this like small pullback trend like this can go on a lot longer than you think. So some people just after any pullback like here, and then bear bar pullback here, they'll just buy, and they'll just hold up until it's not hold on until it's not going up anymore. It's kind of like if you buy above it, there's a chance it'll just keep going up. And if you do get a bear bar here, well, you just sell below it. You just get out below that, so you take a small loss with the chance that it just continues up. So the mini we just keep on staying. It's like this range just gets tighter and tighter right here. So I definitely not be doing anything. Now, if someone was just scalping and selling reversing every bar, yeah, they would have made a lot of money this morning. This is the Bitcoin chart. Daily Bitcoin chart. So this is how I have my trend line drawn. Some people have it up like this, but I've kept mine more like this. So the way I have it drawn, we're actually breaking out above this trend line now, and so possibly this is a big bull flag. This is like the pole of the flag, and then half a year of or more of a pullback. Then we're double bottomed here, higher low double bottom, and then breaking out above, and might continue up, especially with the election coming up. Gold is one of those markets that you can trade 24/7. Well, not 24/7, but you can trade it on the like Eastern time. You can trade on the U.S. Open, or you can trade it on you can trade on the U.S. session or the European session or the Asian session, and it always kind of has consistent volume. It's always going to be around like 500 to a couple thousand in volume. Other markets kind of collapse on like the overnight. Their volume just dries up overnight, but the gold something you can be on it like 1 or 2 in the morning and be trading it. So like all these buys through here, I think they're good looking buys, but just the context that is keeping me out. Like I liked this as a potential swing buy, but then after we've seen that failed, and then like this would have failed as well, then it's just too much, getting chopped around too much. So like the like how this looks like a double bottom above the moving average, I like that, but you know we're just in this tight range here. If you guys have any questions, let me know. I'd be happy to answer them. So now, if gold gets bear bar closing near its low here, I think there'd be more bulls getting out below it. Because here we'd have a wedge. A wedge is 3 pushes. First push, pull back a second push, and then this would be the third push. So you have a wedge. Um, so if it closes near its low, bull would say there's a wedge on the open. We can always buy again later if it continues up. So they'd probably be getting out below it. But looks like they won't get much of a bear body here. So the market has really liked this 5,900 number. We stayed around it so much yesterday. I'll draw a line at it. See, it came down, touched it yesterday, stayed around in the area, broke out above it, came back, tested it, and then today we're testing it multiple times. I think like crude is a little more sporadic. It just seems to be. It seems to just have fewer reliable setups compared to something like E-mini and soybean. So still 2 minutes left on this bar, but so it's a wedge. All right, so this is a reversal pattern. This 3 pushes up often leads to 2 legs down. So will I sell below this bar? I won't. Um, I feel like with it being a bar like this, there'd be a chance that it'll be actually be bought. So if this bar was occurring like here on this bar, like if this bar here, um, if this like if the bar that's happening currently was up here like on this bar, I would have been more interested in some above that, some below that. Um, but I just feel like from experience I've seen bars like this be like bought. You know, and if I'm gonna short blow it, I'd rather have a smaller risk. You know, blow something like this because this has been a lot of buying through here, and to me, like the first strong piece of bearishness would probably be bought. So like for me to sell here, I'd rather not have to risk like 6 points up to here, or 5 or 6 points up to here. I'd rather be risking 2 or 3 points to make 2 or 3 points on the way down. And the reason I'm spending more time on these other charts is because you know, E-mini's not having a very good open. You know, look at it. a lot of choppiness. We actually, I mean, the entire day has been contained within the first bar, and until it gets out of this, I mean, I'm not interested in doing much trading on this. How how often are we at 1050 and we're still within the range of the first bar? I hadn't I just now really thought of that. That's kind of a makes it kind of a special open. So we can see that bulls have not been too eager to be getting out below this bear bar, or at least maybe some did, but there's market's not too eager to be selling below it. You know, went down a little bit, but we haven't really collapsed down. And my hesitation to be selling here was that, um, first of all, we'd have to have relatively large risk, like 5 or 6 points, to be put your stop up here, uh, to have a profit target of maybe 2 or 3 points. And we've been in this tight bull channel, so probably the first strong sign of bearishness will be bought. You know, so I mean, based on that logic, it would actually make more sense to be buying this bar. But if it had occurred over here, like I said, like if this was the high and, um, it was more symmetrical to how this bar looked, then I'd be more interested in selling below that. It'd be a smaller risk, more downside potential. Um, yeah, because now this is like a pullback in a bull trend, but if we were selling up here, it'd be more of like um, it'd just be more of a double top that, because I mean the bulls see this as I think a lot of the bulls that bought here, they see this as, potential to buy at, versus if there's a bear bar up here, you know, they'd say, okay, we have all this profit up here, we'll go ahead and move out of this second entry double top, we'll go ahead and get out below it. E-mini still hanging around this range. Soybean has the potential for a second entry short here. First entry, second entry. I don't think this is a bad swing short there. I was talking about that I was looking for like a second entry short to happen here. For me, it's not quite good enough to short below. I think we need to have a better close, like below these moving averages. We really spent a lot of time right at the moving average here. Got a pretty strong bull bar there. I'd rather see more of a trend first. I'd rather see this bear bar be more below the moving average. I mean, it closed below the moving average, but most of it was actually above the moving average. So the E-mini is starting to get more of a potential for a breakout now. Yeah, we're still in this range, but for the bears that sold here, they're selling higher, trying to be able to get out like in the middle, or they're hoping it'll just come back here or then get out here. But they sold here. It didn't come back all the way here. Tried again here, didn't come all the way back. Now it's trying again here, and now notice these lows are getting higher. So there's here this low, that's a higher low, and now this bar is looking like more of a doji instead of a bull bar. But at this point, this is still a higher low. So the potential for the upside breakout is increasing, because we can see the bears that sold here are getting poor and poor like the tests back here are getting weaker and weaker. But what I said really only mattered if we were getting at that, when I started talking, this was a bull bar up here. Yesterday's range was 40 points. Today's range so far has been about 18 points. So yesterday's range was twice as large as today's range. And when you're getting something like this on the open, normally that means that the range is going to double. So our range has been half of the normal range recently. So we're probably going to break out and double. Now, does it break out below or up? It's still uncertain. I think these higher lows make it a little bit better for the bulls. But it's still tough to say, because this low of yesterday is a really important area. going to be a lot of sellers below this low of yesterday. So maybe the market fails, it fails to break out above, and then it doubles its range going down. That might be a possibility. So gold's getting closer to touching the moving average. So if this bull bar closed just like this, then I think there'd be a decent chance that that'd be a good swing trade. So buying above, put the stop right below it, and you'd go for 2 times your risk. And I say that because we are starting to get these higher lows. So the bears that sold down here are starting to feel more and more pressure as they're unable to take the market lower. And at some point, they would be given up, and we might be able to get a give up bar that would send us up here. Now, let's say this bar continues to go up and it gets too large. Let's say it continues up and it closes up here. Well, then I think the trade is over. You're not going to be. That's not the trade I would be interested in taking. Is trying to buy a large bull bar up here at the top of this range. I'd rather be trying to buy this smaller bar that has the smaller risk and a better chance that the breakout's going to occur. Let's say this gets a tail on top. Then I wouldn't be interested in buying that either. Let's say it closes just like this or a little bit better, then I think that's a decent chance at a swing trade up. But absolutely nothing wrong with waiting, considering just look at all these other swing buys have failed. I think this might be a little bit better than these other ones because we are starting to get higher lows. But anytime you're betting on a breakout above a range, your probability is going to be a little bit lower. This is a tight range through here. A lot of little overlapping bars. But when you actually look at the size of the bars, this last one was 4.5 points. So I wouldn't call it that's not a small bar. So we have like this tight range that's actually made up of medium-sized bars. So that you have that larger risk. So if I was doing anything on the crude chart right now, I'd be selling. And I would not be selling for a scalp. I'd only be going for a swing trade. Gold might take a little bit to find its direction now. And we've had a couple legs down. So after a wedge like this, after these 3 pushes, that's a wedge. And after a wedge, you expect there to be 10 bars and 2 legs down. We've had 2 legs down, but this has only been about 5 bars. So so with it only being 5 bars, that has not been enough of a pullback for that wedge to play out and for then the bulls to start buying again. I think with the strength of this move, we might expect there to be less of a pullback because this was such a tight move. So, we might not be able to get 10 bars of a pullback. So on gold, who has made money today? Buyers that have bought closes of bars, buyers that have bought below bars, buyers that have bought bear bars, and buyers that have bought above bars. So pretty much any type of buying has worked today. Now sellers, selling below bars really hasn't, maybe someone's able to scalp there. I don't think that's good enough though. Maybe they sold here, were able to sell more higher. Maybe they got out break even somewhere here. Selling above bear bars, like selling above this, they needed to ride out this pullback. Selling above this, they would have worked out there, but it's been very strongly in the bulls' favor that the buyers are making money, and that normally continues to happen. So people will continue that pattern, and they'll rack up those wins until they see that the market has changed. So they'll rack up those wins. They're buying through here, buying closes. I was talking about like logically, like this would actually be more of a buy, buying this bear close here. Couple legs back, strong bull bar. I would bet that there's buyers above that. I think pretty much any time I say like this would probably work, or there's probably buyers above, anytime you're looking at a chart and I'm saying that, I think that's a good chance at a swing trade. So if you ever hear me say there's probably buyers above that, it's probably okay for a swing trade, then then that means that the math probably works out, and it wouldn't. Well, that's what it means. I mean, probably wouldn't be a bad swing trade. I think if you're starting out, swing trading is the best thing to do. So if you're watching along, and there's all sorts of different little trades that I talk about that I'm not taking, but I think to gain experience and getting used to taking swing trades, it's like when you hear me say like, oh, like that's probably a good swing trade. If you're doing your sim account or you're trading something small, it might be a good point to consider doing a swing trade in that area. So at least you're taking you can kind of start to get the feel for what it's like to take swing trades, and at least you're taking entries that are decent. So you're starting out with so your trade initially is a decent trade, and then you can see what it's like to manage it and get experience with that way. Like I was talking about, like this, I was saying that's probably, I don't know exactly what I said there, but decent chance that that's gonna try to break out here and go down. And for legal reasons, there's things I can't say. Like I can't direct you to take a trade, but I can point out, oh, that's probably a good trade there, and so that's kind of the language that I'm going to use. It really is impressive how often the 200 moving average works. I mean, I'm pulling up any of these charts, like the euro dollar pulled back to moving average, got bought. Soybean was going up to the moving average, sold off a little bit there, broke out, double topped at it, and then went down a little bit. And then you can see earlier here, I mean, double topped, came up right to it and tested it. Gold. I mean, look at these. Look at these tests here. Came down to it, double bottomed, and then now we spent the next 4 days going straight up. Crude, like yesterday, double topped at it, and now look where we are now. So watch that 200 moving average. I mean, the E-mini chart tested it here. Eventually, it breaks out, and then look what happens. It does the opposite. It acts as resistance. Resistance, breaks out, and look what it does. It pulls back to it and acts as support. So keep that 200 moving average on your chart, and not only will you be able to find some entries off of it, but it'll keep you out of some bad trades. Like, for example, um, this is kind of a strong move up here, but do I want to be buying into the 200 moving average? Probably not. So I might avoid taking a buy like above that, for example. So have it on your chart. It'll be good. It'll help you find. In some cases, it'll help you find some entries, and it'll provide extra context. But it's also going to keep you out of bad trades. So this is kind of what I was talking about on gold earlier. Um, we've had this strong move up on the open. At some point, we were going to have some sort of pullback like this, and from there, once this pullback kind of plays out, it looks like we're still kind of in this pullback phase. We're not going straight up now. We're still hesitating around this level. So once this pullback plays out, it'll probably touch the moving average here soon, and then we'll be able to see, we'll get a buy setup, and we can continue betting that the market might continue up, or market might stall more around the moving average. So we might have more of a trading range like this. Maybe it tries to go up again, tries to get up above the high, and then it fails, gets below the moving average, tries a couple times to go higher but can't and stays below the moving average. Then we start to see selling. So we should have opportunities. If it's going to go higher, we should be able to get in long, or if we see it fail, then we should be able to try to get in on the failure. I have the chat off the side. I'm still kind of working on the best layout for on my screen. I have the chat off to the side, so I do see what you guys are saying. So Sniper said, definitely since I saw your video, I've been using the EMA and my win rate has gone up. I've been doing pretty good trading ES and NASDAQ. That's great. That's exactly why I made that video. I'm glad that's helping you. So what's better, having all these indicators on your chart, like the Bollinger Band, MACD, and clogging up your chart, or is it really just watching the price action and letting the moving averages give you some context and taking trades off those moving averages? To me, that's a lot better. Yeah, your win rate's gone up. So your win rate's gone up, and your potential for good swings is also there. So that's I'm really glad to hear that. I'm glad that was helping you out. So crude, and we have this previous low drawn in here. There we go. Broke out below it. And what the bears want here. Okay, so I have this feature where I can click a button and it'll kind of draw your attention to the cursor. So this close here. Once the market breaks out below this low, they're looking for any bull bodies here to stay below this close. So we can see these tails, the tails overlap. So this tail, after this breakout, this tail here overlaps with this tail. But so far, these the bodies don't overlap. So this body here and then this bull body here does not overlap. So that's kind of a minor sign that of strength. So if this pullback can stay small and not overlap those bodies, then the bears will have some confidence that the market will continue to go down. So the bulls are starting to be less strong on the gold chart. Bears are starting to accumulate more bodies. Possible swing setup forming on the euro future here. Low of the day, move up a couple legs back, double bottom of the moving average, possible swing by above that if it has a good close. Hey, it's almost 11:30, and we are still we're still in the range of the first bar. Yeah, Sniper, I used to have many indicators. I took them off and just focused on the EMA. It made a big difference. That's good. I think most people that do that will have the same story. I think most people would be better off by getting rid of all those extra indicators and just really understand what the bars are doing and why they're doing it. You know, something I talk about a lot is talk about like a head and shoulders. Let me find a good example. This is kind of an example here. So here we'd have the left shoulder, the head, and then the right shoulder of a head and shoulders bottom. So like in my mind, I mean, I know the name is Head and Shoulders, and I use that to get across the idea of what I'm looking at. You know, I can say Head and Shoulders, and everyone knows like the general pattern of that. But it's not just because, you know, it's more than just a name to a pattern. We need to understand actually what's going on. What's happening is that we've formed this low here, and then we formed this low, and the market is trying to go lower, but then it can't. And then it goes higher, and then it tries to go lower again, and then it can't. And then this time, it's even higher than the previous low. And then the bears that have been trying to break out and sell all through this, eventually they start giving up, and then the market does this reversal. So, you know, that's really what's going on in a Head and Shoulders. And there's lots of different things that are like that we kind of just put a name on and don't really think about what's actually going on. So I think like getting rid of your indicators, just really trying to understand the bars. That's what's gonna really make the difference. Every trade that's made, every tick, every movement, everything is happening because someone is buying and selling at that price. Every plot on this bar, every plot on this chart is someone agreeing to buy and sell at that price. And um, really, there's reasons to buy and sell on basically every bar. And you can start to think about, if someone had bought this here, what are they thinking now that they had bad follow through, and then they're starting to get this bear bar, and we're at the top of this trading range? Or if someone had sold this close, and then they get two bull bars, what are they thinking? And you can think about like what you'd be doing, and then apply that to what they're doing. If you sold this close, then you get these two bull bars. Like you're worried. You're starting to get emotional. You're saying, "Oh my gosh, I sold this close," and and guy said we're supposed to go below this low, but now we're not, and I'm up here, and what do I? You'd be getting scared, and you'd be looking at you're having to be 10 points down now. So try to kind of add that to your vision, and be thinking about what other people would be thinking if they were in those trades. So soybeans trying to make a move lower. It looks like if I had sold there, looks like it probably would have been okay. That's right. There's gonna be tons of trades that every trader misses tons of trades. Every day you're gonna miss a trade. Uh, what book would you recommend for technical analysis? Um, I'd really, I mean, Al Brooks has some books. Um, I think he has one on scalping that I think I read most of that book. I think that was a beneficial. It's also, um, honestly, I mean, I found that on a PDF online. Um, so I haven't actually bought any of his books. It was available. Someone had posted it somewhere online, and I read it from there. But yeah, I remember that one. Um, that I did feel like that one was, it added some value. So Al Brooks has some books. You could check that out. Um, I mean, books really. That question comes up a lot. Like, what books to recommend? Um, Books probably aren't the best medium to be learning trading in. Um, I think just watching videos and studying your own charts, I think that's going to be better than most books. Like I've read some books that are supposed to be investing and trading focused, but they really don't add it's mostly just the author kind of just talking about themselves, and it really doesn't teach you much. And that's kind of a kind of a waste of the time. Yeah, I mean, a lot of what I learned was from Al Brooks, so so I'll always people I recommend: Al Brooks, Thomas Wade. So Thomas Wade and another guy named Mac, and you can find them both on YouTube. So Thomas Wade and Mac with price action trading. Um, it's kind of it's kind of I'm gonna draw this on the chart. Oh, so by the way, this gold, if you had, we're talking about this being a possible swing trade. The swing trade would still be on here, so you wouldn't have gotten stopped out if you put your stop there. Um, but let me draw this on the chart. This will be kind of a fun thing to talk about for a couple minutes. So Al Brooks is kind of like the godfather of price action, and so many traders have been influenced by his trading. Um, One of those who really is more, he developed his own stuff independently. So his name is Mac, and he trades the mini. He does the 2000 tick chart, which is what I've got up here. And originally, he was the one that inspired me to also kind of learn the tick chart. And on trend days, you'll see me pull up the tick chart a lot because there's a lot of opportunities on the tick chart. So he's Mac with price action trading system. You can find him on YouTube. So Mac was kind of independent, but he still had a little bit that came from, he still learned a little bit from Al Brooks. And then you have um, Thomas Wade, who's kind of younger. He's kind of closer to, you know, he's older than me, but he's kind of closer to my age than the other two. Um, so he took from both of them. Um, he trades Mac's system on the 2000 tick chart, but then he's also, I'm sure he's gone through all of Al Brooks stuff, and um, so it's kind of like a family tree. And then there's me, and really I've taken from all three of them. So I'm not really, I don't want to like toot my own horn, but I think I'm a good one to learn from because I kind of have looked closely at all their systems, and I've thought about it for a very long time, and um, I've kind of picked out like the best things from their different systems, and I can kind of trade like Al Brooks, or if I want, I could just look at the 2000 tick all day, and I could just I could trade that, and I'd be fine. Um, so interestingly, we had this huge pullback here, this huge tail, but this gap is actually still on. So the close of this bar and the close of this bull bar have not overlapped. So that gap is still there. So now the bears are definitely starting to get more bearishness. Now the bears, if they sold below this low, they could have scalped out. Selling, they could have actually. So this is how you can watch the transition from one type of market to another. All through this, bulls were making money doing anything, and bears pretty much couldn't make any money. But now bears can actually make money selling bull closes. Made money here, 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 and here, all immediately actually. So if they sold the close, they would have immediately made money. So you can see that is different from what was happening here. Here was pretty much just bulls making money, and now bears are actually able to sell bull closes, and they're making money. So to me, that's a transition into at least a trading range for a while. And the market is touching the 200, the 20 moving average here. So like I was saying, every day touches the moving average, and it's touching it there. So after at least 20 bars up like this above the moving average, the first time it touches it is usually bought. So there's probably some buyers here that will try to at least scalp out. And anytime you have the first of something, then there's usually a reversal at that point. So like 5 bull bars up, first bear bar, it usually gets bought. Or first time below a previous bar, it usually gets bought. First time touches the moving average, there's usually some scalpers there buying it. First big bear bar usually gets bought. So now we'll give gold a few bars and see if the bulls are able to take control again, or if the bears will, and then they'll be able to get some sort of swing down to the open of the day. Pulling up the Discord here. Some people had posted trades in this poster trade section. Andy Jassy, I'm sure that's the real Andy Jassy. Let's see. So he did a scalp here. He bought as his bar was buying and scalped out. And then he bought lower again here at the 200. He bought at the 200 moving average and was able to get a scalp. Then Forrest was talking about passing one of his funded accounts. Look at it. He had a pretty good record here. So he had 17 trades. He won 14 of them, so it's a pretty strong win rate. And then his losers were fairly small. So his average losing trade was only $70, and his average winner was $230, and he's winning most of his trades. So he's doing really, really well there. So the bulls were able to get a finally break out above the range, and I think the signs were there that we were talking about. These lows are getting higher and higher. You don't think gold will close the gap today? Let me pull gold back up. I assume you mean let's see, is that what I want? No. I assume you mean like this gap here between the high of yesterday and today's low. So do I think? Well, I think it's definitely possible. And when I was talking about like we would possibly get a reversal somewhere over here. Yeah, that includes coming down and testing like the high of yesterday or the close of yesterday. Um, like so, just in my mind, when I see like a strong move on the open like this, I've seen so many times where we'll have a strong move, it'll stall for a while and get below the moving average, and then the bears will just take over and it'll just collapse through the last 3 hours of the day. So um, yeah, that's why I was talking. That's why I was bringing up how like we could have opportunities to buy and the market continues up, or there could be opportunities to sell. And I definitely could foresee some great swing trades short that would try to close this gap later in the day. So do I think it will close? Probably not. Um, but there could be. But if we start to see some signs that it might, then there'd be some good swing trades out of that. I'll draw that gap in there. Yeah, that's a good catch, sniper. So we have a gap there. Yeah. Bitcoin to that 69,000 now. So this has all been really kind of a tight trading range, kind of a confusing market. But if we just take from where we are now to where like the 935 close, if we go from here to here, we've been in a trend. Now, during here, it's best to stay out of trades. But what the outcome was that, in hindsight, yeah, we were in a trend up. So I was talking about the tick chart. Like I like to do when the market is trending. I like to trade the tick chart. Now I would, I wasn't interested in doing that today because this really isn't the trend. I really wouldn't consider this a trend while I'm trading it. But now in hindsight, knowing that it was going up, the kind of stuff I like to look for when I'm starting to see a trend is something like this. So, let's say leading up to this, we ran a trend and we had a reasonable suspicion the market was going to go higher. Um, Basically, I like to look for just tests to the moving average and bull bars and buy above those bull bars and go for 2 times the risk. That would have been perfect if you did that. So the tick chart, you're going to have less risk, so you don't have to trade with as much risk as you would like on the 5 minute. But you still get to take advantage of swing trades in the trend. So when the market starts trending again, of course I'll pull up the tick and so now on the crude, so this gap has closed. And bulls are looking like they're fairly strong through here. So anytime you're getting like four bars up, like 5 bars, then that's actually a fairly strong move, like a fairly strong pullback. So when I see something like this, I would not be interested in selling at the moving average. I would want that pullback to be a lot weaker than like 4 consecutive bars up like that. All right, guys, I'm gonna. It's almost noon. I'm gonna go ahead and hop off the stream here. Thank you guys for watching. And if you have any questions or like want to post your trades, go ahead and post them on the Discord, and I'll so we can all check them out. Guys, that's all I got for today. So you guys have a good rest of your day.